All right, welcome to the end of day review for today. And today is September 6, 2023, and it's a Wednesday. It's a second trading day of this week, and week we only have, I think, 4 days of trading. Right? We have Tuesday, Wednesday, Thursday, and Friday. We don't have the trading on Mondays, so normally we have 5 trading days, but this week is short, only 4 days. And another interesting that next week we have a huge week, so let's see how this week the market prepare the liquidity for the next week, run right there. So give me just a second. So we are look at the 1 minute time frame, right? Let's review 2 of the trade that we are practice for today. So here's our observation for today, right? We saw that the Monday, the first candle is open 4-hour time frame, right? Let's look at the 4-hour time frame. So on Monday, right there, we have the first candle is the Dow close. So the Monday, the first candle really set tone for or the sentiment for the rest of the week. And you see it's Dow close and it's close below the open of the week right there. And in this case, below the last week close. So give you some idea right there. So that's our observation right there. And we see that the London low did taken out the Asia low and the prior day low. So that can be a bearish signal right there. And also we see that the diversion you see the London we see the diversion at 315, which is the London, right? The London basically, not the London, but the QQQ make a higher low while the SPY make a lower low. So that will give us some trade idea later on. And also we see that the narrow range formed after London, right? After the low will form that. And so we expect a big move at 10 right there. And we see the knot of diversion at 35, and also we see the target on the 1 day time frame or daily time frame hits at 11:12 right here. So here's the idea. The screenshot showed. So basically our target right here, it hit it. So I put the 1 hour 1 day time frame and 1 minute time frame right here. So it hit at that moment right there at the 11-12 minute on the 1 minute time frame, and here is on the daily time frame. Okay, so the first trade, easy trade we saw is, you know, is a auto block, fair value gap retest, right? Let's put right here. Okay. Which is, yeah, this one, the retest right there. You have an auto block right here, right, the over here. This the auto block. The auto block on 5 minutes. Here's 1 minute. Let me see if we have a 5 minute. Okay, let's check a screenshot of 5 minutes. So we are right there, the auto block right here. This is the auto block 5 minutes, and this is a retest right there, right? So this is the 5 minute time frame auto block right there. So let me do like this so we have an idea. Yeah, that's the 5 minutes. Right there. So basically we have auto block, fair value gap retest is on a 5 minute time frame and a short setup. Right, we have what? We have the buy setup really taken on that right there. You see on 1 minute you see more clear, but let's take this one, rate it, and then we have a sell setup really will drop. You see it drop right here, and entry times 0945 right here. And very low read rate. I mean, our stop loss above just 5 cents above the very auto block right there. And our target is at least, you know, this level right here, the high time frame. I think this is the 1 hour time frame, fair value gap. So I'm gonna retest right there, but actually it go all the way here. So it's the high time frame. The imbalance right there. So that is our that's our 5 minute, right? Yeah. Okay, that's our 5 minutes. And for the 1 minute, the entry time can be what? Can be at 53 or 57. So we look at the 1 minute time frame. You can see more clear. Okay, this is the screenshot we take. You see that the buy sell liquidity were taken or rated in this way, just 5 cents above that. You see right here in the chart right here. So the high of this is 51, right? The high of this guy is 2 cents, 49, 51, right? Do you see any higher than that? 49. Wow. 49. They both 49. You see that? And this one only 2 cents above that. So it just simply rate the buy sell liquidity. And after the rate reversal, what are going to do? It immediately moving down with huge displacement and create a fatal gap. And this one, it's just what? It's just a retest and trap the trap or the sell side liquidity right here. Trap the so it trapped the sell side liquidity right there in order to boom going down and wrap that. So early on we say okay, we have auto block right here, fatal gap and retest, so the long setup still playing, so we don't want to go short, right? We thought that this may be a retest and going up, right? So we don't want to go short right here. But at the same time, we see that there are a short setup playing out right here. So auto block and retest, boom, it's gonna go down. So one of the things that we can learn from this is that in this case, you have both setups. So which setup you wanna do? Then we have to follow other, hints. In this case, we see that it moved down and take out the London take out the London low, and then it rate the buy side liquidity. So that's the signal for you, tell you that it's gonna short. The market gonna go into a sell side program. And then the second indicator right here, we see that this order block is validated. It did not break this order block. And at the same time, we see that the sell side liquidity were trapped. So that can give us the idea that the short setup is in. And you see right after that, especially at 10, boom, huge down move right there. See that? So that's the lesson learned for it right there. So the reason the short work, so the reason, okay, so we also observe that the long setup, right, which is a auto block, fair value gap, retest is forming. But the short setup is the source of have a better probability, right? Because this factor, right? The first factor that we saw that is the London low were taken. That means that the market indicator it's gonna go low, right? Were taken for the first 5 minutes. After the open. That's the first factor. And then we see right here, this move is the engineer move right there. This engineer move, right? It's taken down and then this engineer up in order to just read the liquidity. And right after I rate the buy side liquidity, it intermediately create the fair gap down right there. And the second, engineering move right here, it's just a retest. It's not gonna break this. It's not gonna break this one, because in order to break this one, you have to take the sell side liquidity right here in order to break it one, right? That's the logic, but it did not. That means it tried to build up, try to trap the sell side liquidity in order to continue to go down. Okay, so that's the reason why the short setup is play out better than the long setup that we see right here. Yeah. So that means we say the and then we saw the buy side liquidity rate, which is this one is a engineer move, and this one is it rated by side liquidity, however, and also is validate the bearish order block. Then you see that it's a good rate there. That two factor right there, you see that. And also on the other side, we saw that the sell side liquidity trap. So those two factors that help us to go short instead to go long. So that's right here. The London low for the first 5 minutes is after the open, and then the buy side liquidity will rate it, the engineer move, and it violate the bearish order block, and we see the seller trap. That's the reason why the source work. and this setup, have at least reached to a 125 right there. Let's see, at that moment we see that it moved this much right there, $1.74, and we reached only what, 30 cents, but it's now it moved a huge way down. Let's see, it moved more than that. Oh, and one more thing, we see that there are a high frequency, not high frequency, high time frame. In this case, is 4 or 4 hour time frame, or 1 hour time frame, or even the day one. Shows really down. So that means it have it, so it can move down. Yeah, so that's our logic right there. Okay, so that's enough for first trade, and here's another trade idea that we are try to formulate it based on the smart money diversion rate. So right here we see that we're going to short the QQQ. Why? Because the SPY make a lower low, but the QQ make a higher low. So basically it set the social liquidity drop right there. So we're going to short on QQ right after the buy side liquidity were rated right here. We shorted. So it's around, I think, 9:30 or 9:45 for that matter. Yeah, it's have all the hallmark for a short setup right there. You have rated, buy side liquidity, and a social liquidity drop. That's another trade idea that we are seeing today, right? Okay, the reason, the logic behind that, because when we see a smart money, there are two scenarios happen, right? If the diversion, that means the first thought comes to our mind that this is going to reversal. Basically, it's going to reverse and go back. That's the first thought. However, today we find out is that not only the case, but the second scenario, which is the weaker index gonna follow the stronger index. In this case, which is EQ, the QQQ gonna come down, don't go down because the SPY already go down and take the low, so it's gonna go, the QQ gonna go down to take out the the social liquidity here. The logic is that we make assumption that SPY is index is more stable and less volatile than the QQQ, which is in reality is correct. So therefore, if a SPY already make a low, then the QQQ will highly and likely, right? And likely gonna make a low as well. That means that we can go and short the QQQ right there. So that's the idea, right? Okay, one more thing before we wrap up. We have about 6 more minutes. We come up with this setup called breaking down London low short setup. Basically, when we see whenever it break down the London low, we will short them if it meet the condition, right? Remember, keep in mind that it can be what? It can be a reversal, right? After it take London low, it's gonna go up also. So, but in this case, we are going and short them if, right? If it's second, let me make the note right here, second trading day of the wick right there. So basically we see the condition. We see the London low was taking out the Asia low. That means the market is set go to the sell side, grab the sell side really, and also the prior day low. So that's the condition, the first condition we see. And then we see that the narrow range will form after the London low will form. Look at the 5-minute time frame, we can see that. Let's look at 5-minute time frame. Over here. Oh, we're up the wrong one. Where is our 5-minute time frame? Okay, so right here we see today we learn lots of things today. Okay, so basically we see that the London low, right, take out the Asian low and also the prior day low right there. So take both low out, and after I take those two low out, it form a very narrow, you see, very narrow range right there. That means we're gonna expect a big move around 10 o'clock. That's the idea. That's the thing we see right there. See that? Now the next step for us to end, we need to identify the order block, the bearish one from the London section, right? In this case, we enter this one. After we identify that order block, then we need to identify the fair value gap and the displacement, not displace, displacement, the tick and the London low for the first 5 minutes after the open. Yes, which is this one. These two gonna check our London low, and then we watch for the manipulation, which is the retest right there, for the engineer move right there. The engineer move, it should be that engineer move gonna rate the buy side liquidity. It take place around 40-45. Right, look at the 1 minute timestamp. We can see more that we can have. Look in the detail of the engineer move. You see the engineer move right here? This is the engineer move that I'm talking about. Right here, that's move. This is the move. The move right here. Let's use the Fibonacci area. That's the engineer move right there. This engineer move is it trap the buy side liquidity, and also it trap the sell side, and it rate the buy side liquidity, and it trap the sell side liquidity right here. So that's the engineer move right there. However, in this 1 minute, you can see that it make another engineer move right here, which is a retest right there. Basically, it make the engineer move right here, the manipulation move, and then it do a retest of that order block. The last time before, the last move, because to go now. So that's an idea. Okay, so go back to our setup, and then we enter on the retest of the buy side right after, right on the retest after buy side equivalent, and the entry time is about 9:50 to 10:50 right there, and our stop loss just above the fair value gap, and the target is the high time frame fair value gap, either D1 or X1, or 3 or 4 standard deviation of the engineer move right there. And this setup is formed on Tuesday or Wednesday, the second trading day of the week. In this case, our second day is fall on Wednesday, right? That's the idea. We can add one more condition that so the Monday 4-hour time frame is a down close candle. That's the condition. Oh yeah, down close. So whenever we see this setup, then we check it. No hesitation. And you see how much it's moved down. Let's look at the 5-minute time frame. You see, wow, it reached 4 right here. So after the PM session, it starts to reverse. It starts to retracement. But you see right here you have one standard variation, and then you have 2 standard, almost 3 standard variation from manipulation move. So I think 3 standard variation, that's a huge move right there, you see. So 3 standard variation move. Then let's see how much you remember we enter around here. Then let's see what is our, let's say we enter right here. Then to see how much we make on this trade. Let's say we get out of this level. Wow, it's a $4. $4 move, man, and we reach only 30 cents. Wow, only 30 cents. Let's check the screenshot of this. What we got, I think that's the same idea we put right there, right? We have right here, we're gonna put order block, value gap, the retest, and it is short setup. And entry time is 09. I think the condition we already say, right? We have a buy side liquidity rated in this case, and we have sell side liquidity or trap, and entry time is 55. We can either 50 or 0955 right there. That's the time window first right there. And target is 3 1-hour standard deviation of the engineer move. Basically a retest move right there. Watch out for the retest. That's the engineer move right there. And here's our target. Is 13. So we enter around here. Oh, we enter right here also, and the target right here, hit right there at that time. Yeah, that's the trade we are trying to looking for. So this is the trade we're gonna, the setup that we are build. We're gonna keep looking for the setup. Second day, second trading of the week. Look for the trade. It's gonna be on Tuesday or Wednesday. Look at that. That's beautiful and easy trade right there. Very low risk trade. Okay, now look at, before we wrap up right here, now look at the DR model. So the DR model is working fine today, right? It's make all the way here and then it go back to the range and then it go down. So when you have this, you know that it's gonna confirm they're gonna go down, and this is a retest, and boom, you're gonna get it. But you only get 0.5 standard deviation for the DR today. It didn't reach the 1.0 standard deviation right there. So that's for the DR model right there. Anyway, time's up, and thank you for your time and interest. Talk to you later. Bye for now.